Dreaming of owning a home outside the city, but worried about a huge down payment? What if I told you there's a powerful government-backed loan designed to make that dream a reality, often with no money down? This is Mark Weston, and in this video, I am going to break down the USDA loan. You'll learn exactly what it is, who qualifies, the simple steps to apply, its incredible benefits, and, importantly, a full picture of all the costs involved. Not just your monthly payment. So, what exactly is a USDA loan? It's a mortgage program backed by the United States Department of Agriculture. Its primary goal is to help low to moderate income individuals and families purchase safe, decent, and affordable homes in eligible rural areas across the U.S. To qualify for a USDA loan, there are a few key criteria. We'll look at your credit score, typically needing a 640 or higher, but exceptions can be made. There are income limits, so your household income must fall within USDA guidelines for your area. And crucially, the property itself must be located in an eligible rural area as defined by the USDA. Okay, so you're thinking about applying. What documents should you start gathering? We'll typically ask for your W-2s from the last 2 years, recent pay stubs, bank statements to verify assets, and a valid photo ID. Don't worry if you don't have everything ready now, we're here to guide you. Why choose a USDA loan? The biggest benefit for many is zero down payment. Yes, 100% financing is possible. You might also find more flexible credit requirements compared to some conventional loans and competitive interest rates, making homeownership more accessible. Plus, it's government-backed, offering extra security. There are a few common misunderstandings about USDA loans. One big one is that they're only for farmers or agricultural workers. False. Many professions qualify. Another myth is that there are no eligible properties left. Also false. While specific areas apply, many suburban adjacent and rural areas are still eligible. Ready to see how easy the process can be? First, we recommend starting with a pre-approval. This is much stronger than a pre-qualification because we've actually reviewed your credit and financial documents, giving you a conditional approval of your loan amount. This tells sellers you're a serious buyer. Once pre-approved, you search for homes in eligible USDA areas, make an offer, go through underwriting, and finally, close on your new home. You won't be navigating this alone. You'll have a fantastic team. First, your lender. That's us, guiding your financing. Then, a dedicated real estate agent who understands USDA-eligible properties. You'll work with an appraiser to confirm the home's value, a home inspector to check its condition, and a title company or attorney to handle the legal transfer of ownership. We all work together to get you home. Let's tackle some common questions. Can I qualify for a USDA loan with student loan debt? Often, yes, we can factor that in. Is my credit score high enough? We work with a range of scores, and while 640 is ideal, we can explore options below that under certain circumstances. What if your situation is a bit unique? If you're self-employed, we can typically use your last 2 years of tax returns for income verification. No problem. If you're still a student, we can assess your future income potential. And if your credit is a bit rocky, we might have strategies to help improve it or alternative solutions. When it comes to your monthly payment for any mortgage, it's typically PITI, principal, paying down the loan, interest, cost of borrowing, taxes, property taxes, and insurance, homeowner's insurance, plus USDA's guarantee fees. Your specific interest rate will be influenced by factors like your credit score, the current market rates, and the loan term you choose. Your regular PITI payment is crucial, but it's not the only cost of home ownership. You'll also encounter closing costs, which are expenses like lender fees, title fees, and appraisal fees. Then there are prepaids, things like your first year of homeowner's insurance and some property taxes that you'll pay upfront into an escrow account. And finally, HOA fees if your property is in a community with one. We'll provide a clear breakdown of all these, so there are no surprises. So how long does it take to go from application to having keys in hand? Generally, the entire USDA loan process, from initial application to closing, takes anywhere from 30 to 60 days. This can vary based on how quickly we get documents and the unique circumstances of your loan, but we'll always keep you updated. Meet Sarah. She never thought owning a home in the countryside was possible until she discovered the USDA loan. With our guidance, she secured 100% financing and now enjoys her beautiful rural property, proving that with the right loan and team, your dream home is within reach. Let's quickly recap what we've covered. The USDA loan is a powerful government-backed option for rural home ownership, often with no down payment. It helps families like yours, and starting with pre-approval is your best first step. We've shown you what to expect and that you'll have a team to guide you through all the costs. Ready to see if a USDA loan is right for your rural home ownership dream? Don't wait! Visit CommunityHeightsFunding.com to check your eligibility today. It's quick, easy, and the first step towards getting those keys. What happens next? Once you fill out the form, expect a friendly call or email from our team within 24 hours to discuss your personalized options and answer any remaining questions. See you in the next one.